Singapore savings bonds can be a perfect complement to REITs. So let's talk about what the Singapore savings bonds are and why they are very good complements to REITs. So the Singapore savings bonds can be perfectly illustrated with using an example. For example, the September 2022 issue. So we can see that the maturity is 10 years and the amount offered is $900 million. And the interest will be paid every half a year. So in this case, in September and in March. And the applicant can invest and can apply in multiples of $500 with a minimum of $500. And the total amount of the SSB is capped at $200,000. So if you look at the interest rate calendar, it's also nicely spelled out on the MAS website. So if you bought, for example, the September 2022 issue, in the first year, your interest rate is 2.63%, second year 2.71%, and so on and so forth. And the 10th year is 3.04%. So you can see it's a stepped up calendar, right? And the average return per annum is illustrated over here. So if you hold the SSB for 5 years and then you decide to redeem it, your effective rate when held to this tenure is 2.69%. So it's kind of a weighted average of all these coupons over here, right? So if you hold the SSB to maturity, you get your full principal back and your effective rate per annum is 2.8%. So let's talk about what's so interesting about the SSB subsequently. The SSB is a very uniquely Singapore product, and I say this is a very good innovation from MES in that there's a free put given to the investor. So let's think about why this is happening. If you look at the traditional bonds, or in the Singapore's context, the government bond is the SGS. There's a problem, right, in that it's very sensitive to interest rates movements. So if rates are going up, then the price of the bonds will fall. And if the rates are going down, the price will rise. So you can see the bond prices are subject to rate movements, right? And this is a problem because if you have an emergency and you decide that you need the cash and you decide to sell the bond, then you might suffer a capital loss, right? So if you have an emergency, for example, a medical emergency, and then you decide to sell the bond and it coincided with a period of rising interest rates, then the bond prices will fall and therefore you might suffer capital losses. So SSB is a uniquely Singapore invention which is designed to arrest this problem so that the investor can always redeem the SSB at par in any month and get your full principal back. So there's no risk of capital losses, right? If you have an emergency and you need the cash, you just go to the ATM and then you redeem, and the next month you get your money back, full money back. If you invested $1,000, you'll get $1,000 back. There's no capital losses, right? So you see, this is the main attraction of the SSB. There's no risk of capital losses. It's a free put. So let's look at why it's a good complement to REITs. And you can see I gave a picture of a seesaw, right? This is because for a REIT investor, you can see that the REIT is subject to the seesaw movements of interest rates, right? If interest rates are going down, that obviously is a good thing, right? Because the borrowing cost of the REIT is down, and therefore your DP will go up. And in general, if rates are down, then the share price will also rally because REITs are quite sensitive to interest rates. So in a falling interest rate environment, your REIT portfolio will do well. Your SSB will do well as well, because if rates are going down, then the SSBs that you have bought previously enjoy a much higher interest rate, and you can just sit back and relax and collect the high interest rates until maturity. So you can see that the in a falling interest rate environment, things are quite well controlled. The problem though is if interest rates are going up, and you can see that in this environment, REITs do not do well because borrowing costs are going up, and therefore your DPU will be impacted. And in general, equity prices will be falling, and therefore your REIT prices will be falling as well. But in this case, the Singapore savings bonds will actually do well, because if rates are going up, you can always redeem and apply for higher yielding issues. So imagine if you applied for Singapore savings bonds when rates are at 2%, and now rates are at 5%. You can just go to the ATM and redeem your SSB and take the money and you apply for higher yielding issues and capture the higher yielding rates without any losses of capital. But this has the downside though, in that there is always a risk that at the balloting at the ATM, you might not get the full issue that you apply for. So look at this phenomenon which started happening in 2022. So you can see these are the issues in 2022, right? Starting from January and in September. You can see that the prior to June 2022, in general, the applicants have kind of gotten what they wanted, right? So in January, the issue size is $150 million, and the applicants only applied for $76 million. So pretty much everybody got what they wanted, right? And the ceiling cap was maintained at $200,000, and it happened all the way until May. But in June 2022, something happened, right? Because the issue was $350 million. So this was higher than $150 million in January. But despite that, the applicants hit $900 million. So in the end, the ballot had to be held, and the ceiling quantity was had a ceiling of $15,000. So you could not get everything that you wanted for. You could only get a maximum of $15,000. And this happened for the subsequent issues. You can see the applicants were way above the amount that was available, and therefore the ballot had to be held, and not everybody could get everything they wanted. So in September, for example, in the issue that we just talked about, the quantity was capped at $13,000 per applicant. So you can see in this issue, the size was $900 million, and the total was $1.9 billion. So there was really a lot of demand from the investors for this SSB issue, and understandably, right, because the rates are actually quite attractive, bidding the fixed deposits and stuff. So you can see that there is also a downside to this strategy, but nonetheless, on the whole, the SSB is a pretty good complement to the REIT investor. So we've come to the end of this video. If you like what you saw, remember to subscribe and like.